Hey guys, Dave Keller here with Market Misbehavior. I just got back from over a week in beautiful Mumbai, India. I met a lot of fantastic people, reconnected with some old friends, got to talk a lot about the prospects for India, and often what came up was gold. So gold is often thought of as a safe haven. And if you would have told me before 2022 that the equity markets would be down 20, 30%, through most of the year, I would say one of the most obvious places to hide out would be gold. Tends to do well, particularly when inflation is the biggest issue. It's not been the case this year, and that's because of the U.S. dollar. In my discussions in India, a lot of times it came back to strength in Indian stocks, but the strength in the dollar sort of deteriorating those returns for U.S.-based investors. Today, we'll look at the chart of the dollar, how that relates to what happened with other risk assets in 2022, and then focus on the GLD chart of spot gold with some particular ideas given the short-term strength that we've seen. Let's get to the charts. Okay, here's my chart of the US dollar. As you can see, the dollar from mid-2021 through most of 2022 has been in an incredibly strong uptrend. We can measure that uptrend in a number of different ways. Charles Dow's basic definition are looking at the highs and the low. And here we can see a very clear pattern, a consistent pattern of higher highs and higher lows. That potentially has changed recently, and we'll get back to that in a second. Second, the dollar has spent most of the last year and a half above its 50-day moving average, and numerous pullbacks to the 50-day moving average have found further upside. We saw that through much of 2021 and into 2022. That all changed in the last 6 weeks, where we've seen finally a breakdown through the 50-day moving average. Third, we can look at the momentum characteristics. And here we have the RSI, the Relative Strength Index, which generally measures the strength of price momentum. Think of it, if you're more of a statistical person, as taking a z-score of the prices, and that's sort of what this would come out as. The RSI ranges from 0 to 100. Above 70 is considered overbought. Below 30 is considered oversold. Those are often treated as short-term reversal points or potential inflection points. But here's the real way that I like to use RSI, and this is based on work by Andy Caldwell, who unfortunately passed away earlier this year, and Connie Brown in her book, Technical Analysis for the Trading Professional. We have a link in the description below. Really beautiful description and illustration of this particular concept. It's basically in a bull market phase, the entire range of the RSI tends to gravitate higher. You become overbought in rally phases, and you rarely get all the way down to the oversold level. You often bottom out around an RSI of 40. In a downtrend, by the way, the whole thing changes. So you usually get oversold when you have a sell-off, and then when you rally, you rarely get much above 60. So recognize when we've changed the range of the RSI can be a really important way to understand a rotation in momentum or a shift in the supply-demand picture. Look how since the middle of 2021, the RSI is sort of in that classic bull market phase. When it's pulled back, when the market's pulled back, it's never really gotten much below 30, or below 40, excuse me. Today, as of Thursday's close, which is a pretty nice rally for stocks and a pullback in the dollar, the RSI has gotten below 40 for only a handful of times in the last year and a half. If that RSI continues lower, if that momentum continues lower and gets down to the oversold level, that's arguably one of the more long-term bearish signals you could see for the dollar. Now, the reason why the dollar is so important is because the strong dollar has basically crushed all other assets, gold and precious metals, commodities, stocks, certainly, the S&P, the NASDAQ, and even global markets. Also, bonds have been in a downtrend, and that strong dollar has really been, it's sort of been strong dollar weak everything else. So what about the everything else? And if you weren't in, owning the dollar like the UUP or something like that, where was a good place to hide out? So if you look at the year-to-date returns, gold, and I'm using the GLD here, which is a liquid gold ETF, gold's at this point down about 4.4% for the year. You compare that to the S&P 500's negative 16% for the year, and the NASDAQ even more at a sub 20% down for the year. So just owning gold in 2022, while it hasn't been a great absolute bet, you haven't grown your assets. If you just bought gold at the beginning of the year and didn't own any stocks, you actually have been outperforming by about 12%, which is not bad in a year when risk assets have been struggling so much. So gold hasn't been bad on a relative basis, but overall you can see that the relative the trend in gold overall has been lower, with lower highs and lower lows. That potentially changed their October into November. And let's look a little bit closer at the chart of the GLD. So again, this is a liquid gold ETF. We have the price at the top with all sorts of notations, which I'll talk about in a moment. We have the RSI, which we talked about, and then the relative strength, just showing the relative performance of gold versus the S&P 500. Here's that downtrend we saw in the previous chart, with gold making a new low going into September. It then sort of has now been in this sort of rectangle pattern, an M pattern, really a W pattern is what I would call this, which is when it finds a fairly consistent level of support. It's actually a triple bottom here. If you look, there was a low in late September, mid-October, and early November, all right around that 151 to 152 range. From there, we've broken higher, back above the 50-day moving average for the first time since April, and now breaking above this most recent swing high, which I think is an important one. When gold, the GLD got above 160, which took it to a new closing high for the last 2 months. I thought that was pretty meaningful. You see further upside for sure, and you glance up on the chart and look what is sort of overhanging the current levels. There are a couple things. The first Fibonacci retracement level, taking March's high and September's low, 38.2% of the way would be around 167. So that's actually lining up very well with the high from August of this year. And it's also lining up really well with the 200-day moving average, which means as you see gold go higher, which I would certainly think is a fair assumption here, look for resistance in that area, because that's what we would call a confluence of resistance. If we break above there, then you could see upside to the previous highs in March, in May around 175, or even that next Fibonacci level around 177. Note how the RSI has shifted from a bear market phase in mid-21 to a bull market phase in late 21, early 22, to a bear market phase through most of this year. And now finally, the RSI getting nicely above 60, indicating a rotation back to the bullish phase. And that's what gives me confidence in this breakup to new highs. Now, just so we're clear, how does this relate to the chart of spot gold? If you're not familiar with the GLD, you're just looking at the spot prices. So here we have that consistent support level around 1620, and then you can see the rally breaking above the October highs, just like we saw on the chart of the GLD. If we continue a little bit further, which I think is likely, that puts us around 1800, and that would be generally a confluence between the Fibonacci retracement level, the 200-day moving average, which would be right there, and the intraday high in August was actually a little bit further up in 1820. So that would be sort of that general range of the first area where I might expect resistance. From there, 1900 would be an upside objective, taking us to that final Fibonacci retracement line. But note how the momentum has gone above 60. And when I see all of the different charts of gold, when I look at Newmont Mining and Kinross and Royal Gold and all those other ones that have started to rotate higher, it's whether they can get above a recent swing high, but it's especially about the momentum getting stronger. And I think that's maybe the most encouraging sign on the chart of gold. So there you go. The chart of gold is finally making a new swing high. Is there enough upside momentum to continue things further? The strength in the RSI suggests that it will, but it's all about the dollar. As long as that dollar chart is remaining low, gold, which is obviously denominated in dollars, has an opportunity to move much higher. I'm Dave Keller from Market Misbehavior. Wish you well, stay safe, and we'll be back with you again soon.